It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
Hey everybody, it's Tyrone Jackson, the wealthy investor, and welcome back to Trading Stocks Made Easy, episode number 215. We've come a long way. Well, hopefully, if you've been listening to the podcast for the past couple of years, you've come a long way, and I think you're going to kind of like this episode. Every episode that I do of this particular show is really meant for me to help you get that financial education and think about the future. Why the future? Okay, let's talk about this. Whenever you're buying shares in a company as an investor, you are always future focused, right? So if I go and I buy 175 shares of Microsoft at today's level, it's not about what the stock is going to be trading at this afternoon or tomorrow morning. As an investor, I'm taking a long-term view, and I really want to know where the stock is going to be 5 years from now, right? Investing is different than trading stocks. When I'm trading stocks, I'm looking to make a fast profit when the stock ticks up $1, $2, $3, $5, $7, $10, something like that. But an investor says, hey, I'm willing to buy these shares today because I think they'll be worth more tomorrow. Tomorrow being 5 years from now. We call that your time horizon. So as an investor, it's all about your time horizon. Some people have a 2-year time horizon, right? I think this stock will be higher 2 years from now. If you're greedy, you think the stock is going to be higher by Christmas substantially and you'll be rich. That's unrealistic. The game just doesn't work that way. Don't be greedy. So when you're an investor, you are planting seeds for tomorrow. The most common investment time horizon is 5 years. Now, let me just stop here before I get specific about certain stocks in particular. You know those people who used to take your money, your financial advisor? Well, listen to this. They have no idea what that stock is going to be worth in the future. They really don't care because every time you make a deposit into your account, they get a commission. They will talk to you about time horizons, not because they're bad people. They are calculating their commissions on your deposits over a 5-year time period, right? So when they talk to you about a 5, 10, or 15-year time period or time horizon, it's because they know if they have 100 clients like you who are willing to set their expectation on a 5-year time horizon and you're depositing, let's say, $1,000 a month, well, 100 people depositing $1,000 a month into a mutual fund, most commonly, gives you a pretty good idea as to how much commission you're generating on a monthly basis. Do you get it? Okay. Self-directed investors like you and I, when we buy stocks directly, guess what? We're taking a time horizon because we don't earn any commission. We earn money off the appreciation, in other words, the stock price rising. Seems really simple, but sometimes people forget about the basics. So why are you paying someone commission when you can choose stocks on your own and all of that money makes its way into your online brokerage account? The answer as to why you are not doing it is because most people don't realize they can do it on their own. Well, Tyrone, you don't understand. I'm not really a great stock picker like you are, so I'm not always sure of what I'm doing. Well, that's why you joined the Wealthy Investor Program, right? So you can get that financial education and keep all of the profits from your trading and from your long-term investments that do well. So I really don't subscribe to the notion that you don't pick stocks well. I subscribe to the notion that you just need to be taught how to choose stocks well. Get it? Because all wealth is taught. And once you have that instruction and you've been introduced to a methodology of picking stocks that have worked over the long term, you'll be just fine. Now, we know it also works because we're not choosing stocks randomly when we take the wealthy investor approach. We're choosing stocks according to patterns. Well, first of all, those stocks need to be members of the Dow Jones Industrial Average. Why? That index was designed to help you recognize stocks that are high performing. That's why Mr. Dow and Mr. Jones actually put it together. Two other guys came along, the S&P 500, and they said, no, it can't be about 30 Dow stocks. It has to be about 500 stocks. And they created an index called the S&P 500, which includes the Dow Jones Industrial Average. See, if you're going to be rich, you have to make sure you understand history. So rather than choosing stocks outside of the Dow and the S&P, why don't you make your first round of choices inside the Dow and the S&P, and you'll already be choosing winning stocks, or as I like to say, winning dates. By the way, you ever go on a date with a loser? Someone who has no money, or they have money just for today, but they're uncertain about their financial future. Well, if you become a couple with them, what's going to happen to you? You're going to become uncertain about your financial future. But if you're with someone who's a planner and has been taught how to save, how to invest, and how to plan according to a schedule, what's going to happen with your life and that person? It's probably, at least from a material point of view, going to be solid, right? Because you're with a solid person. And we all know the universe, like, always attracts like. So whoever you're attracted to in your life, they're probably, to one extent or another, a reflection of you. It's the same thing with money. They say most couples break up because of sex or money issues. Well, on this show, if you follow me, I can't help you on the sex part. Actually, I could if I really put my mind to it, but it's not that kind of show. I can help you in the relationship and financial realm. And that's what today, episode 215, is all about. Getting you the right information so that you are future focused instead of everything being about how to trade. So I want to talk to you about the evolution of companies, the evolution of publicly traded companies, and why some companies evolve sooner, better, faster than others. You could also add the term adapt on that. Who adapts to the environment that we're in? Now, we all know we're in a changing world that's changing very quickly due to technology. What kind of technology? A lot of technology. Things like servers, internet speed, broadband. It's all factored into the term technology. But you'll see what I mean here when it comes to investing as I give you this example. Certain companies in the stock market evolve or adapt to a changing environment better. So let's think about this. Let's look at S&P component, Amazon, ticker symbol AMZN. This company's shares have doubled in price every 5 years. Now, why is that? Well, it's because of the amount of revenue that the company is actually generating, right? And they generate that revenue because when a new segment of the marketplace opens up, they're there. Now, do you remember when Amazon just sold books? Yes. Amazon, for those of you who may not know, started out as a book retailer, both new books and old books. What has happened over the last 15 to 20 years? Well, they evolved. Instead of just selling books, they then started to sell things like computer equipment, and they became an online marketplace. And you weren't just ordering from Amazon, you were ordering from drop shippers and other companies that Amazon allowed to put on its platform so that it can grow. How does Amazon make billions and billions of dollars? Because every transaction that is performed on their platform, they get a piece, even if they're not the one actually selling you the item. So Amazon is now the Walmart of the internet. They can sell you everything around the world at the cheapest price, and then they condition us to buy from them. You know, analysts use all these terms, and one of the terms that come up to describe companies that evolve are sometimes disruptors, right? So if you've ever heard that term used in the context of investing, Amazon has disrupted how we buy things online because we have a tendency to think of them first, and anybody who wants to compete with Amazon must be on the same level. And one way that they've disrupted how we buy products and how we think about products is with delivery. Okay, so they spent billions and billions of dollars learning how to master what they call logistics. In other words, because I just ordered something yesterday on Amazon, right, that will be at my home either today or latest tomorrow. Now, if you think about that, when you ordered products on the internet, let's say 7 years ago, you'd have to wait 7 days or a week or so for that product to show up. Amazon has mastered logistically how to store stuff in a factory, I'm using layman's terms, of course, and how to get them to you overnight based on where you are. And it's that mastery of logistics that shapes your expectations about when something should be delivered at your home. So if you have the choice between Amazon and, let's say, some other retail outfit, you know that Amazon, quick delivery, right? But they've invested billions of dollars to be able to deliver that item to you in a reliable way. So they have evolved, and the more that Amazon evolves, what's going to happen? They are going to have more revenue. They're finding new ways to make money. So Amazon is not only in the product delivery business, they're also now in the streaming business, but they weren't as comfortable with the idea that streaming would make more money, so they tied it together with what they call Amazon Prime. They knew they could sell people on discounts on certain items and give them a streaming service at the same time. Why? They're very forward-looking. Ultimately, the plan that was floated out there, we don't know if this is 100% true, but those of us who invest in the company understood 3 years ago with Amazon Prime, they said, we'll give you Prime for a flat rate, and whenever there are discounts available, Prime members will be able to take advantage of that. At one point, there was talk of the products that you most purchase showing up in the movies that you watch on their streaming service. So the movies would have product placement in them, and you would receive a discount for ordering. That was one direction they were going to go, but we haven't heard much about that. Okay, so Amazon is a company that evolves. That's why the stock price keeps rising, because they keep finding new revenue streams. You know, when you become a billion-dollar company, sometimes you don't really want to evolve. The CEO becomes extremely rich. The shareholders are making money. But if you forget to evolve in today's environment, your stock will not go higher. See, this is some of the nuances involved in actually picking really good stocks. Companies that adapt well and companies that evolve. So Amazon, and this is the big one, is also in the streaming business through AWS. Now, a lot of shareholders don't realize this, that Amazon Web Services is a vast part of its quarterly income stream. And who uses Amazon Web Services? Well, how about Disney? Yes, this Disney streaming platform is built on Amazon AWS. Did you know that? Yes, basically every other streaming service is employing Amazon and their servers. So when you call up a movie and it's there without buffering, right, and the signal flows directly to your phone or a device online, guess who's responsible for that? Amazon. This makes them ubiquitous. That means they're everywhere, doing everything all at once, because they're a company that knows how to adapt and evolve. Back in a moment.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
And welcome back. Are you starting to make some valuable connections here? That investing and getting rich in the stock market requires that you understand that technology is forcing us to evolve and some companies get left behind. Let's get back to today's lesson. All right, Microsoft. Microsoft 25 years ago was about Windows and its operating system. And as Bill Gates used to say, his vision was to see Windows on every computer screen in the world. Did he reach that? He got doggone close because we're all still buying the latest version of Microsoft to run on the Windows platform. Except now we don't go to the store and buy it, we download it. And they make you pay a monthly fee, a monthly subscription to make sure that you have the latest updates. We all know it's about revenue. Yeah, updates may be in there, and they want to make sure there's no virus on your computer. But if you start billing 500 million people $5, $6, $7, $20 a month or per quarter, that forces the revenue to rise. Okay? But Microsoft, what I do like about them is they're very forward-looking, and they are also earning a substantial amount of their money from what? From the server business. You see, it's almost like these industrial superpowers can see the future, and when you're hosting people's content or their streaming services, do those hosting prices go up or down over time? Yes, they go up. They increase in value, right? And as Microsoft adds additional revenue streams, what does that do to the top line? It forces it up. We as investors see there's more value in the company, future earnings, we buy more shares. Boom, Microsoft stock rises. And if you check the last 5 years, they've gone up 100%. Why? Well, they're very good at adapting and evolving. You see, wealth is not only about your consciousness, your money, and your thoughts. It's getting the right financial education that you can apply as a stock market investor. Why in the world are you giving your money to somebody else to let them handle it when they're in it more for the commission instead of picking good stocks directly? You have the power right now to change your life if you open an online brokerage account and you start buying Dow stocks as investments. Now, I can't tell you what stock you should be buying, but I can introduce you to the stories that have adaptation and evolution built into them so that you can at least see the concept. Let's move on before we run out of time to two last contenders. Well, one's not really a contender, but they're not doing so well at evolving. Bed Bath & Beyond, which is off its all-time high, and at the time of this recording, it's around like 37 cents a share, right? Now, how do you come down from $47 to 37 cents a share? Because you don't evolve. Now, I believe the executives at Bed Bath & Beyond tried to evolve, but the marketplace was moving too fast, and they couldn't pull their operation online, and they couldn't offer things like bed sheets and towels and towel holders and dispensers and home goods at the price that Amazon could. Therefore, Amazon beat them in the marketplace. Hey, have you ever sat down and played Monopoly? What's the objective, if you really think about it, of Monopoly? It's not that there be 2 winners or 3 winners. Really, it's that one person wins and puts everyone out of business. Did you realize that? That's why the game is so long, right? Because the whole goal is to take the 7 people at the table out and have one person who owns everything. Well, I hate to tell you, but sometimes in business, in the real world, it's about owning a marketplace. And if your competitor drops and falls, hey, you inherit the rest of that marketplace. Do you get it? And that's where Amazon did a really great job on price and service and logistics, and they are putting a lot of companies out of business as we speak. So if your revenue is dropping and you're not adapting, what's going to happen to your share price? Investors lose interest. They sell off your shares. They move on to the next company. And speaking of the next company, this next one is a member of the Dow Jones Industrial Average. And if you've been listening to the show on a regular basis, you've heard me talk about Disney. Why does the stock price keep falling? Because although they're trying to adapt, they try to adapt in a way that is not inherently good for their company. They started that streaming service. I've talked about this a lot on the show. And guess what's happening? It's losing $4.2 billion a year. They suspended the dividend, and they made it up on the theme park entrance fees. And they're just not able to keep up with the quality programming that is necessary to keep you paying for their service. Now, if you're trying to evolve in a direction that is not your specialty and you're losing money, people who really pay attention to their investment dollars are going to sell off their shares because they don't feel comfortable in the company's ability to make money at the same level in the future. This is called negative sentiment. So when investors start to feel negatively about a company, they sell off the shares. It doesn't matter that you have these wonderful feelings about the Walt Disney Company and Mickey Mouse and Goofy. If they're losing money on this streaming service, the stock price is going to sell off. Got it? Yes. That's why I'm always encouraging you to join the Wealthy Investor community and the Wealthy Investor program, because there are so many positive opportunities to direct your money into stock prices and companies that are evolving. But you have to study the market flow, the companies that are in favor, and the companies that have positive sentiment surrounding them, because that's what millionaires and billionaires do. They study on a regular basis so they know how to make good, positive, strong investments based on the future stock price. I hope you learned something in episode 215. If you did, share it on social media. Tell your friends about it. Why? You're not going to get rich on your own. You're going to need to be surrounded by a community of people who think like you and who invest like you. Remember, you deserve to be wealthy. You deserve to be rich. You deserve to have the right financial education so you never have to struggle or worry about money ever again, because your investments are taking care of you. I'm Tyrone Jackson, the Wealthy Investor. Join me at thewealthyinvestor.net. Download my free ebook to learn more about investing and how to take it, baby, to the next level financially. I'll be there for you, and I'll see you on the wealthier side of things.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.